With the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, the IMF raises China's GDP growth forecast to 5% this year, and China has set up its third investment fund to boost its semiconductor industry. And now let's begin with our top story. The International Monetary Fund expects China's economy to grow 5% this year, raising its forecast from the previous 4.6%. In its latest assessment, the fund credits the revision to China's strong economic performance in the first quarter and a raft of new policy measures. The IMF highlighted the efforts of Chinese authorities to achieve high-quality growth by supporting innovation, upgrading financial sector regulations, and introducing policies to mitigate property sector and local government debt risk. China's GDP growth in the first quarter beat market expectations to reach 5.3%, kicking off a good start to the year. So for more on this, joined us on the line now are Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. So Yan, I will start with you. So the IMF has raised its growth projection for China's economy for this year and next year. So what do you think has driven that decision?
Right. So the IMF have upgraded their growth forecast for China to reach 5% of growth rate for this year. And the IMF, the chief economist, Goh Bingta, talked about the two major reasons for the revision. The first reason was that the China's first quarter GDP growth rate has achieved, 5.3%, which, as you mentioned, it beats the market expectation. So that gave them the confidence that, China's economic growth is on a solid footing. And so that's one of the reasons. And the second reason that she pointed out is because of many of the policy supports that have been put in place. So that goes from, the issuance of the ultra-long treasury bonds, 1 trillion Chinese yuan, and also the recent policies, such as the trading programs that it's meant to stimulate consumption, and also industrial upgrading that was announced in March. And then most recently, there are also the new policies to support the property market by relaxing, purchase restrictions, and also by lowering, down payments and also mortgage rates. So all these policies are going to help the economy to grow continuously for the rest of the year. And so that was the second reason for why, the Chinese growth forecast should be upward revised.
And so, Professor Qu, as we know, China's first quarter GDP growth reached 5.3%. So what do you think are the main factors or drivers behind it? And how do you view the internal and external environment for China's economy?
Well, I think the major reason is, number one, I think the export and import in China has been improved. I think the reason why is, number one, from the supply side, China very largely optimized its, export structures from these low-end and labor-intensive products like before, and now it's what we call the three new things: EV, solar panels, lithium batteries. So these are the products with a high added value, and also has a lot of competitive edge in the whole world market, especially when the whole world is running after, the green campaign, trying to, catch up with the emission-free, movement. So this kind of product has become really popular. More than that, I think the high-end mechanics, machineries, and also digital devices, which is very important for the modern economy, has also been a great export from China. And import-wise, China has also been increasing its import. I think the second one is about consumption. Well, this is actually more than everybody's expectation, because ever since last year, we've been seeing the consumption sector in China has been accelerating really, really fast. Tourism market, hospitality industry, catering industry, we've been seeing most of them are having double-digit growth. Some people say that just a 1 year or half a year thing, but basically, even till now, more than 1 year already, we've been seeing the growth momentum is still very, sustainable. And also more than that is, I think the stabilization of the property market and also the government investment into the infrastructures and the long-term optimization has also been taking effect. Chinese government just issued about the ultra-long T-bond, try to help the whole economy try to upgrade, for example, the infrastructures against a flood and drought. For example, the repurchasement of these newly built homes for the affordable housing, those are aiming at the long-term repairment of the balance sheet of the cities and also of the household. So I think for that reason, Chinese economy is actually gaining up the momentum in the Q1 of this year.
So actually, Professor Xu talked about exports, and the IMF also urged stronger global trade ties. So what do you comment on that?
Right. So I think the IMF did mention, some of the downside risks, such as the fragmented pressures. And so in other words, we're starting to see a lot more protectionist policies outside of China, in some ways trying to, contain China's advanced product exports. But that said, I think, as Professor Qi mentioned, that the Chinese exports actually maintained a very good momentum. When you look at the first 4 months of the year, exports measured in the RMB has gone up by 4.9%. In April, the export grew actually by 5.1%. So you're seeing this, I think, on the one hand, that there is this kinds of protectionist policies around, but at the same time, China is taking advantage of the tailwind of the tech cycle. So now there's a lot more demand for Chinese products, ranging from automobiles to electronics. When you look at China's exports, I think what it's encouraging is not just the expansion of trade exports, but also really the improvements in terms of the trade structures, in terms of the products that China have been exporting. So Professor Xi mentioned this new trails, the 3 new products, and look at China's car exports. It has expanded or grew by close to 29% year on year in April. And high-tech products increased by 3.1%, and then the integrated circuits exports has actually gone up by 17.8%. Now, this is despite all the tech containments that the United States had with China. So I think these are all encouraging signs that shows that exports will be a solid driver for the economic growth in 2024. That said, China remains a very large economy, and so a lot of the demand should come from domestic economy, and it will, again, taking advantage of the continued improvements on consumer sentiment, job situations, and their income growth, and also various policy supports, like we just mentioned, the trade-in of home appliances and automobiles and so on and so forth. So I think, we have the confidence that the domestic demand will continue to improve. And it's not just about consumer demand, but also, large-scale manufacturing investments and also infrastructure investments.
So, Professor Qu, actually, China has recently announced a slew of new policies to promote the housing sales. And cities like Shanghai, Guangzhou, and Shenzhen are also optimizing their real estate policies. So, what does it mean for people looking to buy houses, especially those who want to sell their old property and buy a better one?
Well, I think upgrading the living conditions or the housing conditions is very important in the big cities like Beijing, Shanghai, or some other first and second tier city in China. Because most of the house in this big city has actually been firstly built back in the 1980s or in the early of the 1990s with very old interior decor. It's very inconvenient, and also the room and space inside of the apartment are usually very, very small. Right now, I think it's a major moment that Chinese government to try to help the citizens to, upgrade their living condition, bigger house, more modernized, technologies, and also better infrastructures inside of it. So if you want just to renovate those kind of the houses, well, you would probably spend more of the money. So in a better way, we probably should, build some new houses by tearing down the old ones on the ground, on site, and then build the new ones, better ones on the site. We'll be seeing many of these projects being, built in Beijing and Shanghai since last year, and the people are really welcoming it. And also, I think more than that, Chinese government is trying to provide with the local government more of the funding, especially with the local platforms, help them to purchase some newly built commercial, homes. And then this homes will be used as affordable housing, providing to young people, young families, so that they can just move in with a very affordable price. And in the long run, it's going to be good for, the people's income increasement. More than that, through this kind of the strategy, the financial flow for the developers, especially in the inventory of the existing houses, will be solved. The choke point will be, unclogged. And that's going to be very good for the financial systems and stabilities. So I think this is just a one stone, two birds. It's good for people and good for the developers and good for the whole financial scenario as a whole.
And so China also began to issue the 1 trillion yuan in ultra long-term special bonds. So in what ways do you think these bonds will help stimulate China's economic growth?
Right. So I think this ultra long bond issuance is very important, even though it is not factored into the budget. So we're not going to see an increase in the budget deficit in the headline, deficit GDP ratio. That said, I think the great majority of this money will be funneled into some of the local governments. And I think that would be really helpful because, as we know, many local governments relying on land sales for part of their fiscal revenues. And so that income now has been drying out for some of the localities. And so I think with these bond issuance and the money, the funds goes into the local governments to help to, stabilize their financial situations and also allow this local governments to carry out certain policies. For example, purchasing some of the existing housing inventories and turn them into social housing. So I think this is a very important policy. On the one hand, it really helped to stabilize, the local government's, financial conditions, and on the other hand, help them to carry out some of the important fiscal spending, not only to support the local economies, but also to continue to provide the social programs and public services to the local residents. So I think this is very important, and I'm hoping that more of these kinds of policies will come down from the pipeline, depending on the needs of the economy. But I definitely think this is a very pragmatic and also very effective move on the part of the central government.
So, Professor Chu, actually, China has also urged the efforts to promote the high quality and sufficient employment. So, what is the high quality employment, do you think? And how can China ensure both the quantity and the quality of jobs?
Well, high quality employment will have many definitions. I think, through different eyes, they have different, explanations. But I think all in all, I think the high quality employment must be, well paid. And in order to do so, I think it's not just by a single effort. I think it's a comprehensive job. I think number one, all in all, we need the a fundamental change in the Chinese economic structures. So which means the whole Chinese economy need to climb up to the higher level of ladders. The whole value chain of Chinese economy need to move up. So which means more of the high value added job can be, created in China. It's like EV, like solar panel making, this kind of the new manufacturing with new quality productive forces, has already been creating such kind of the jobs, which helps the college graduate to get better earnings and better working conditions. And meanwhile, consumption is a very important key because when China is marching over the threshold of the middle income country, it's very important to see that every country, when they march over that threshold, their economic structure will always change. Consumption will become the number one important sector of the whole economy. America, Germany, Japan, South Korea, England, they all see that kind of history before. So when China moved across this threshold, and I think consumption will become the major area to create jobs. And usually consumption area like hospitality industry, catering industry, tourism, culture spending, they will always have better offered jobs with higher quality and higher earning. So this is also important. Chinese government should nurture the sectors and help the whole economy structures to move toward the directions. And thirdly, it's about export and import. Since China is moving on some of the value chain outside of China and also introducing in some high value added like research and development, work into China. So more of these jobs will be created in this area. And also, of course, the government need to help the students to get them better technology training, better of the skills training, and higher education need to be further developed. And all these will go along with the optimization of economic structure in China. So it's a long-term involvement, and we're still in the very beginning of this long transition. But I think when economy fundamentally been upgraded, and the job will also be like that.
Well, we're speaking with Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, China set up its third investment fund to boost the country's semiconductor industry. Stay with us.
China is believed to be on track towards peaking its greenhouse gas emissions years ahead of schedule. What's the major driving factor? Since the country's coal-fired power capacity continues to expand, would there be a U-turn down the road to emission peak? And as China marches towards carbon neutrality by 2060, what could be the major uncertain factors impeding it from reaching the goal in time or in advance? Find out on this week's Chat Lounge, wherever you listen to podcasts, and on CGTN Radio.
Welcome. I'm Elaf Elad, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You're listening to Biz Today. I'm Zhao Yang in Beijing. China has set up its third investment fund to boost its semiconductor industry. This is the third phase of the China Integrated Circuit Industry Investment Fund, which has registered capital of 344 billion yuan, or $47.5 billion. The first phase of the fund was established in the year 2014 with registered capital of more than 138 billion yuan. The second phase followed in the year 2019 with 204 billion yuan. So yeah, actually the China Integrated Circuit Industry Investment Fund, this is also known as the Big Fund, and it aims to bring the country's semiconductor industry up to the international standards. However, as we know, over the past 2 years, the U.S. has cut off China to buy the most advanced chips from, companies like NVIDIA. So what do you make of these moves by the U.S. and what's their concerns or considerations?
Right. So the United States' pretext, of course, is due to the so-called national security concerns. They wanted to contain some of these advanced chips from being the so-called dual-use technologies from going into China. But I think these kinds of policies or strategies would not work, at least not in the medium long term. Because all these would just simply, incentivize and galvanize China to develop its own self-sufficiency in making the chips and working with other, like-minded countries in the world and try to develop their own, technological, production and also research and development. And so what we're seeing in the past 10 years is that government big funds have been set up and that not only provide the necessary financing for the industries, but also it really helped to crowd in private capital and also send the policy signals to the entrepreneurs that these are the sectors that China will use all the resources to nurture. And I think that is very powerful mobilizing force to develop the chips in China. So when you look at China's last almost 10, 20 years of development, China has really made breakthroughs in some of the mature nodes capacity in terms of the production. So I think there's a lot of progresses on the part of China, which basically indicates the kind of containment strategies would basically backfire.
So, Professor Xu, so what do you think is the role will this, big fund, play in supporting the semiconductor industry?
Well, definitely, this is going to be a huge support and booster for the future semiconductor industry in China. You take a look at the size. I like the word that you use. It's called big fund. Well, it's really big. It's about 50 billion US dollar just to boost one industry. Well, if you know about the phase one is about only 1/3 or 1/4 of this size, but this one is really big. Not only the Ministry of the Finance or other, government, department and ministries, but also the 6th largest bank in China also has been pitched in this big fund to try to help China to nurture its own semiconductor industries. So I think this effort and the money input is really unprecedented. But also we have to understand that this is, again, a very long transit. Well, I think the phase one big fund is really a great success. You see, the phase one of the big fund is actually try to nurture what Professor Lang has just mentioned about like the 48 to 24 nanometers. So that is very easy to make. Even for China, we do not have a very solid start in the semiconductor industry, but now we can really make it in China, very good quality. And to be honest, most of the electronics who use semiconductors will only use like the 24 nanometers. It's not like the top-notch technology, but it's very robust and very solid to use. It covers more than 75% of the electronics which uses chips. But here comes the hard part. That is, as the smaller you get and more delicate you get with the chips and the wafers, and more technology and more investment will be input into it. The growth will be, input will be grow exponentially, and also the difficulties will also be increased exponentially. So with like 10 billion US dollar, you can easily cover 75% of the products that use chips. But with 50 billion US dollar, probably we're not approaching the top-notch level of the whole world, which is like under 5 nanometers. Well, if we're lucky enough, we can catch up with the 7 nanometers in the first place. I think we'll call it, a phasal, success. So it's going to be very, very difficult for this one, but we still need to do this. Well, we have done this job in the phase one, probably within 3 or 2 years. But now in the phase three fund, even with, 50 billion US dollar investment, if we can overcome these difficulties within 5 years or 6 years, I would like to say it's going to be a great success.
Mm-hmm. And yeah, so there are some, global chip makers like NVIDIA, like Intel, and they have the first mover advantage. So what can China do to strengthen the self-reliance in this kind of critical technologies?
So I think, first of all, again, subsidizing or supporting microchips development, it's not unique to China. So when we look at, for example, the Bloomberg has reported that U.S. and European Union have funded nearly $81 billion towards the next generation of semiconductors. And worldwide, $380 billion were earmarked by government to boost the chip developments. So I think what that means is, first of all, what do we learn from the lesson is we do need the government support in this because it's very expensive industry to take off and to continue to develop. So we do need a kind of public investment, public funds to support and to take on the risks. And second, I think you're right. These first mover advantages are going to definitely stay with some of these companies. That said, I think, again, from China's example, China has had a really solid industrial basis, and it also has really well-trained many high-tech professionals and talents. And so that is what helped China to grow from almost zero to now, as I mentioned, when it comes to the more matured nodes, chips, China was able to really account for almost 1/4 of the global manufacturing capacity now. So yes, the next step, the third phase, is really to focus on the chip manufacturing equipment and also some of the AI-related chips. And as Professor Chi said, this is a big undertaking. There will be a lot of challenges, but Huawei has been known for its resilience and its innovability in the past decades. So I think there's a lot of potential, I think, for Huawei and SMIC to work together to advance these technologies, with the government support, with the talents, the recruitment of talents, but also cultivation of domestic talents. So I think all these are very important. And last but not the least, I think it's also very important to build a kind of ecosystem where the research centers, universities, and on-the-ground, professionals, and all of these should work together to be able to really make sure that the technologies that are developed are really needed in all these different aspects, and to be able to go from the labs to more mass manufacturing, more commercialized kind of undertakings. And last but not the least, I also think it's important to work with the global supply chain. I think despite the fact that the United States is trying to cut China off of the global sort of the more advanced chips, I think there's still room for China to work with Japan, for example, or even Netherlands. I think many of these countries still really hope to work with China in some capacity, in some shapes and forms. And I think China definitely need to take advantage of the global supply chain of the manufacturing and development of these chips, because no single country, I think, in the world right now is able to really develop a completely sort of self-sufficient supply chain for chips. And so it's very important for China to find opportunities to work with other potential partners.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and also Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.